Hello, ETF fans. Mike here with another video insight. Um, Today, I'm going to do something a little bit different. I'm going to do a Market Musings video insight where I use our ETF Navigator tool to illustrate how you can break down the ETF market using look-through analytics, and specifically using ETF Action's proprietary derived analytics sets to illustrate a couple of kind of key insights I think are relative in today's market, specifically kind of looking at the ETF market through the lens of home country bias here in the US based on allocations. Also looking at allocations based on size and style to really illustrate that, you know, despite us thinking we're investing into core strategies like the S&P 500 or the Russell 1000, if you actually look under the hood at these portfolios, because of the way they're built, market capitalization, and because of the market we're in, where everything is being driven by mega cap tech, and there's this huge divergence of these trillion-dollar mega cap companies that are obviously growth oriented strategies versus your traditional core portfolios where you'd have a balance of growth and value and core securities, and really just kind of take a different look at that and then compare that to what those ETF allocations look like relative to broad-based ETFs like the S&P 500, like MSCI ACWI, to get a sense of how portfolios are currently allocated through the lens of ETFs as a good representation of the market, which they are, with over $12.5 trillion in US listed ETFs. Really gives you an idea of how investors are positioned through the use of ETFs. So that's what I want to do today. It's going to be a little different. I'm going to use our ETF Navigator tool to do that. So let's get started. I'm going to hop into our member access platform. The first thing I'm going to do, I'm going to go into our databases and I'm going to go to our Navigator tool. Just as a quick, refresher for those of you that are not familiar with it or, have not an opportunity to truly explore this tool, the Navigator allows you to utilize a number of our data sets that are in that ETF database to set filters and group and view ETF market, in different groupings and different ways to understanding how they're allocated based on our classification systems, based on look-through analytics, et cetera. So just to kind of quickly give you a sense, if I open up, looking at the Navigator tool here, you can see right now it's grouped up by asset class, composite, and category. So let's just stick to equity. I'm going to open up equity. You can see we have, 7 composites that represent equity ETFs. The largest, of course, being US size and style, followed by global ex-US size and style. Then you have sector and industry, thematic, region and country ETFs, size and style global, and then specialty being, hedged equity or long short equity, whatever it may be. If you go within these groups, then you'll see the categories, the 9 size and styles, with large cap blend representing 3.8 trillion, large growth 1.1 trillion. I want you to think about those numbers, right? Okay, seems pretty square here. We've got a little bit growth tilt in large cap growth, 1.2 trillion versus 860 billion. But note, this is on a classification basis. ETF Action takes a lot of pride in the time and effort we put into classifying funds, but classification is not the same as a purely rules-based assignment of what these strategies actually are. And that's what I want to illustrate today. So to do this, I'm going to use some of our derived analytics data sets. And the first thing I'm going to do is I'm going to get rid of all of my groupings. I'm going to get rid of all these classification groups. And so now I'm just looking at the 4,400 plus ETFs in the market. And I'm going to get rid of my total return columns and just focus on AUM and flows. And the first thing I want to do is I want to just focus on the equity market, right? So we got 12.8 trillion right here in total ETF assets. If I come into my derived analytics, I'm going to switch from my columns to my filters tab. Just going to make this a little bigger so you can see it. I'm going to go into derived analytics and I'm going to first set a filter on equity. Now, if using derived analytics, if an ETF is assigned equity, it means that over 90% of the holdings inside of that ETF are common stock. They're equity-based holdings. And what we can see is, it's $9.9 trillion. So once I've done that, now what I want to do is, rather than group this up using our classification system, I'm going to switch to my columns tool, and I'm going to group this up based on our derived analytics. So first thing I want to see is market assignment. Next thing I want to show is size assignment and style assignment. Now I'll explain all this as I go along, but to note, this is rules-based assignments. This is not, me telling you the S&P 500 is a core US large cap core or blend strategy. It's looking through, utilizing the data we license from FactSet and saying, how are these portfolios tilted relative to the market? And so to do that, first thing I want to point out is you can see $7.8 trillion is assigned US. That means that over 80% of the holdings inside of these 1,305 ETFs right here have over 80% in US listed stocks, US domiciled companies. And what I want to do is I'm going to hit apply up here. What that just did is it applied these new groupings to my charts tool so I can see over time analysis. And what I want to point out first and foremost in this market musing is the home country bias that is alive and well here in the US. So 79% of the entire ETF market that are equity-based portfolios, almost 80%, is allocated to US. Another, 3.4% is global, which I would note most global portfolios have a very high bias to US, but they're not over 80%. What does that mean? Well, let's take it in terms of, okay, this is all, this is a US market. Let's hop into my ETF database and let's pull up ITOT, which is the S&P 500 Total US Stock Market Index. I'm going to pull this up in my research frame. I'm going to go to my composition tab. Once I'm in my composition tab, I'm going to switch over to equity, and I want to illustrate. Oh, I'm sorry. I didn't mean to do ITOT. I meant to do ACWI. I'll do ITOT here in a second. But I'm going to pull in ACWI, which is the MSCI All Country World Index ETF, right? So it's a representation of market cap weighted across the globe. And I want to show the composition of the portfolio in terms of market. And what we're going to see is 62.7% is US. Now that's a big number, especially like when you think going back just 15 years ago, 20 years ago, it was well under 50% of the total world market cap weighted ACWI was in US. So this is growing significantly just because of market dynamics on its own. But if you compare this 62.74% to our actual allocations based on ETF assets, we can see, a huge bias in the US listed ETFs to ETFs that hold US stocks, primarily hold US stocks. So that's my first observation kind of in this market musing, is that there's just a large allocation. Now, that's been a great bet, right? US markets up until this year have significantly outperformed international markets. But it's notable that that is an active allocation decision when you look through the lens of ETFs of being inside of strategies that are focused on US companies. The second thing I want to do is I want to just focus in on the US market. So to do that, I'm going to go back to my filters tab. I'm going to set a new filter on just US. So this means I've now narrowed it down to just ETFs that have over 80% of their holdings in US companies. So 7.88 trillion in AUM there. And if I open this up, remember I grouped by market, size, and style. And the first thing that's going to jump out at you is, based on our rules-based assignment, $6.7 trillion are in large cap strategies. Now, this can be a little misleading in that large cap for the purposes of this definition, includes any ETF that has greater than 65 of their portfolio in large cap. But obviously, the vast majority of assets in US based ETFs are tilted towards large cap companies, right? So if I hit apply again up here, open up my charts, I'm going to go on size assignment just to give you kind of a visual of what that looks like. 85, 86% large cap tilted strategies, right? Another 8.4 mid cap, 5.9% small cap. And that's all based on look-through analysis of the companies using FactSet data, their Revere system for allocating a company between large, small, mid, and micro cap companies. So clearly a huge large cap bias. Now, where this really gets interesting is when you start looking at size style assignment. So I'll just open up large cap and you'll see 5.17 trillion of the 6.7 are in portfolios that, based on a look-through analysis, have a significant tilt, a large enough tilt to growth companies to be assigned a growth rating, meaning that there's a 25% difference between the weighted average of the portfolio in large cap growth names versus large cap value names. Again, using that FactSet data that we license and aggregate up to our ETF level here at ETF Action. That's a huge allocation. Now, of course, the only way you can get there is because the S&P 500 right now is a growth portfolio, right? We classify it as a core blend holding, but if you look through to it on a look-through basis of, Amazon, Nvidia, the Mag 7 companies making up such a large percentage of the portfolio, those are all growth names based, no matter how you look at it, whether it's valuations, growth rates, growth metrics, whatever it may be, they have a large tilt. And so that is, if I'm just looking at a classification system saying, I'm, investing in the core strategy. Well, no, really, as of right now, as of today, you are investing in a portfolio that is much more a growth portfolio than a value portfolio. So let's look at that in terms of, what it looks like from a breakdown of market share. And here's what you're going to see. 67.5% of all of the assets inside of US based strategies have a significant tilt, a large enough tilt, 25% differential between growth and value stocks to be assigned a growth style assignment. That is, a huge number. Now it's been a very good way to be set up, and it's, it's because of market capitalization. A lot of it is just how the market has changed, but it's worth noting that, in terms of how are investors allocated, just looking through to the underlying companies, there's three kind of dynamics that we see here. One, there's a big home bias, right? 80+% allocated to ETFs that have over 80% of their holdings in US companies. There's a big bias to large cap names, right? Most of the portfolio's overwhelming allocation, 87%, is in that large cap leaning portfolios. And then finally, if you look at the breakdown, and probably the largest and most glaring number is when you look at style assignment, 67.5% of all assets. This is sector strategies, factor strategies, active strategies, all of them aggregated up. The portfolio has a large enough tilt to be classified on a rules-based concept as growth. And I think it's just an interesting way to think about kind of, how the market has evolved, and also maybe some unintentional bets that are being applied in the market right now, some concentration issues that, advisors might want to think about as they're building out their portfolio. Should I be thinking about an equal weight strategy? Should I be thinking about adding in some intentional value, some intentional international strategies to kind of offset that? Now, if you'd have done that 5 years ago, you would have underperformed the market. But it's, something to just to know about, right? To not be surprised about if and when market leadership changes, there's going to be, a significant amount of assets that are allocated in very differently. to the market. So kind of a neat way to look at it. I hope you enjoyed this kind of video insight, market musing of how our ETFs allocated, not based on our proprietary classification system, but true look through analytics of equity ETFs. If you have any questions about our Navigator tool, it's a really powerful way to group up and download data to visualize, how the market is going, where the flows are going. Obviously, I just kind of focused on AUM, but you can track flows, you can take aggregated performance, all these different things, and it's a great way to just kind of analyze and look at the market in different viewpoints, the ETF market in different viewpoints. So, obviously reach out to the team at ETF Action. The Navigator tool is a free tool. Downloading capabilities are limited to premium subscribers, but this tool is available to anyone who creates an account in ETF Action. And we're always available to assist in training, getting you kind of understanding how it all works. So hope you enjoyed the insight. Be mindful of your allocations out there and have a wonderful day. Thanks for watching.